Welcome everybody to Institutional Hunt. This is my basic technical analysis guide to the MACD. This series is a simplistic understanding of different indicators that are commonly used, how to use them, what their functions are, and how to add them into your trade plan. Now the MACD does not stand for MACD. It actually stands for Moving Average Convergence Divergence, but I will go into that in a little bit more later. But basically, this is a very powerful indicator. It's something that I definitely recommend adding into your trade plan. My main use for it actually is for divergence, which I will get into in a little bit with the live demonstration. But first, let's understand it just a little bit more. So let me jump over here and we'll go ahead and talk about kind of the generals of it. First and foremost, like I said, it's moving average, convergence, divergence, and it's basically calculated similar to a moving average. It does get a little bit more on the complicated side, but basically utilizes moving averages to determine whenever they're converging together, meaning they're crossing, and there's a divergence, meaning they are not moving in the same, manner, I guess you could say, or pattern. Or they're, diverging from each other too far. There's a lot of interesting components to it. There is a lot of trade strategies for the MACD. I'm only going to cover the basic ones, but predominantly they are utilized for entry signals. I also tend to use the MACD for underlying power, just to get an idea, like if it's already on my chart and I'm looking at it and I can see it's above the water line or below the water line, that'll give me a general idea of strength or weakness. It doesn't necessarily mean certainty for either side, but it's another little snapshot tool you can get to build the story of the trade that you're trying to make. Okay, so why do you want to use the MACD? First and foremost, it's one of the most consistent indicators. It's important to understand that it's a lagging indicator. And I remember whenever I very first started trading all those years ago, I remember looking at the MACD and thinking to myself, oh my goodness, if I just do everything the MACD does, I'm going to be a bajillionaire by Wednesday. And that's not how it works. It is a lagging indicator, which means that it kind of shapes as the market shaping. So you'll actually, if you look real close, you can actually see, like on shorter time frames, you can see the little lines moving up and down and everything else like that towards the beginning of where the MACD is forming. So it's not going to just be perfect every single time. You do have to wait for, if you're waiting for cross signals or something like that, you have to wait for the confirmations on those cross signals. You can't just assume that they're going to be hunky-dory. So that's very, very important. A lot of times the crosses don't have a lot of power, or, they just don't make a lot of sense. So I myself personally have written expert advisors plenty of times for MT4 and, coded them out myself. And one thing I can tell you with absolute certainty is that the MACD is not a 100% tool. It is meant to add to the story itself, because I have just done a basic one out of curiosity to see what would happen if you bought on every up cross and you sold on every down cross, and you do lose your shirt on it. So it's not something that you want to not utilize correctly. You want to make sure you understand what you're doing with the MACD and what the purpose and the goal is of it all. It is my favorite divergence indicator. The RSI also is a good divergence indicator, and so are stochastics. If I'm going to pick between divergence indicators, those are my three favorite, though I am less in favor of the stochastics because I just find them to be consistently less accurate on the divergence. But if it is a big enough divergence on the stochastics, it's not like a small one, then I might be interested in going into it. But I'll show you what a divergence is in a second. But basically, the things that you need to know about the MACD are that it is an entry signal generator of sorts, and it's also a divergence indicator. With those two things in mind, we can go to the live demonstration. Okay, so here we are looking at the screen right now, and I'm going to go into the different possibilities. I've already got a divergence that was, I don't know if you saw it or not, but it was on the side and was in the intro as well, that I've kind of illustrated out so I can show you what a good divergence would look like. But for right now, I just want to go over the general crosses. Now, I'm going to delete this volume indicator because I'm not going to use it right now, and you might be able to see I am actually in a small position. It's the reason why I'm going for a small position on this particular trade is I'm kind of leading the I'm leading this pattern that I noticed before, and I don't want to get too aggressive on it because it hasn't actually confirmed the pattern yet, but the fundamentals are supporting the concept behind the trade. There's a lot of convergence in this area, so, anyway, moving on. Basically, here and here, you're going to be able to see the MACD crosses, and, once again, you see something like this, and you're going to think to yourself, man, if I just do everything the MACD does, I'm going to make $1 billion, and that's not always the case. This one right here is a great example of the MACD crosses and how effective they are, and, you see this MACD cross here, and that's fantastic, but you also see it coming off of this support and resistance line right there. You see it crossing above the water line, which is the 00 line, meaning it's in positive territory versus negative territory. Now you're starting to see that the trade is, pretty legitimate. Like, for instance, in this one, you see it cross above the water line with this cross off this resistance line, off the 200 EMA. And you can start to say to yourself, okay, well, that's pretty important. Adding in the fact that you have this major candle here that's actually engulfing the previous one, taking that up is a pretty easy decision whenever it comes down to it. Overall, though, I am actually pretty bearish on the New Zealand dollar because they consistently believe that their currency is overvalued and they are intending to manipulate the exchange rate. So I am not a bear. I'm not a bull on the NZD, which means I am, not going to be interested in buys or anything like that. But as you can see, you've got a cross here, you've got a cross here, and the theory is you're supposed to be buying, boom, and you're supposed to be buying here, or selling here, buying here. If it's above the line, that means it has more buying power than it does selling power. If it's below the line, it has more selling power than it does buying power, meaning it's more in a negative territory and it's more likely to be weaker than stronger. That being said, I mean, you have to use that at your own discretion. If you're going to use a tool like that, I might do RSI over the MACD just because, it's a little bit better and more effective for that in my personal opinion. But I also don't think you need general strength indications as much as, you might think, because you can see generally this is strong right now because it's kind of moving in the upward pattern. But as you can see, it's starting to run into this resistance right here. It tried to break through, immediately came down, created a head and shoulders. So I don't necessarily need the MACD for that. But what I do want the MACD for is divergence. And divergence is amazing. And it makes me very happy. And it's incredibly effective. And I highly recommend it. So here is a fantastic example of a divergence. It is a... you see right here, wherever it had a low right there, and then it had a lower low right here. But on the MACD, we had a lower low and then a higher low, which means that this trend and this trend are not in sync. If this was oversold more, you would think that this should be lower, but it's not. When you see that, that is the D in the MACD. That is the divergence. That is one of my favorite things to use about the MACD, and you should totally be utilizing that to your benefit as much as humanly possible. Here is another example, actually, of a divergence. You see it kind of crossing down right here. You've got this high, and then you have this high. Clearly, this is above this. So you can sit there and say, I'm starting to see a major divergence in the MACD. It might be time for me to take this trade on to the short side. Now, you would have seen this divergence here, and you might have even gotten in, around this area here for a little bit of that trade, which is actually, I say a little bit, but that's 200 pips because we're looking at the 4-hour chart. But, that's a good trade. That's a nice little tasty trade to make, and it's definitely something that you want to be aware of whenever you see them. So divergences are fantastic. They're very effective, and they need to be part of your arsenal. And one of the best tools for that is the MACD. Sure, you can utilize the crosses, and I do recommend utilizing the crosses as confirmations or to use them to back up other things that you see. Like if you see a large bearish engulfing candle that's taking place right on a MACD cross, okay. you can go ahead and sell that. Or vice versa, you see a bullish engulfing candle right on the MACD cross up. Okay, well, that might be a good indication. Don't use it as your only thing. Look for your resistance lines, look for your support lines, and trade on those. Your job as a trader is not to do anything crazy other than buy on support and sell on resistance. If you get notifications or indications of any sort that's going to, enhance that, like say the MACD and you're on a pivot point and it's a general support line, then, all those things line up at once, fantastic. But the goal is always you want to buy on support and you want to sell on resistance. So either way, that's the MACD in a nutshell. I sincerely hope that you appreciated the video or you liked the video and you have any questions, concerns, issues, or anything that I can do to answer on the MACD. I would be just so happy to answer those things for you. It's a brand new channel and I'm doing whatever I can to, have some people subscribe to the channel itself and become active, because I am a person that benefits from an active community and I just learn better. I'm more effective whenever I have a group to work with, and instead of trying to cultivate one from existing groups, I decided to try and create my own group. So that is where I'm here for. That's what I'm looking to do. Obviously, I'm not a tip service. I'm not here to make trade recommendations for, how you should trade right here, right now, though I do live trading and stuff like that. My goal here is to, educate you, and then by doing so, grow as myself as a trader. So either way, thank you very much for coming. Thank you. I very much appreciate your time. If you have any questions, leave a comment. If you enjoyed the video, leave a like. And if you want to see more content, subscribe. It'll let you know whenever I'm going live on my next day plannings, which I do every day, 4 Central to 5 Central Standard Time. If you miss those, they'll automatically be uploaded to YouTube, so you can come back and look at them at your leisure. And thank you very much. Let me know if you need anything else, and I will see you in the next video.